All right, today we're going to document a single, complete market cycle for the Dow Jones 30. This was all recorded by a system called Market DNA. Now, our goal here is pretty simple. We're just going to observe the events as they were documented, from the initial setup all the way to the final outcome. So let's jump right in. So just to be super clear right up front, Market DNA is a proprietary geometric system. We are not here to analyze it or try to interpret its methods. Our focus is strictly on documenting this one recorded cycle exactly as it played out.
Okay, so let's get into the case study itself. We're going to follow this one cycle from the very beginning, the initial plan, all the way to the final result. The asset in question is the Dow Jones 30, or DJ30 for short. And this specific cycle has a unique identifier, DJ30__3__.
So, every cycle kicks off with what's called phase one, the setup. This is really the blueprint, right? It's where the entire initial plan and all the parameters are laid out. Let's take a look at what that blueprint looked like for this particular cycle.
All right, here's the initial chart recorded on March 30th, 2026. You can see the geometric structure that was put in place. And notice it included two potential entry zones, which are marked by the points M and piece of C.
So based on those two potential entry points, a single mean entry price was calculated for this cycle. And that number came out to $44,316. Now, here's where we get a look at how the risk was previewed from the start. Using a hypothetical capital of $100,000, the expected maximum drawdown was set at 5%, so $5,000. This then led to a calculated trade size of 0.09 for each of those two potential entries. And to explain how they got that number, the source material gives us this exact sentence, and I'm quoting here. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size.
Okay, so the plan didn't just stop at entry. It also laid out a path forward with three distinct price targets. The first one, T1, was at 45,182. The second, T2, was at a point called Apex N at 46,246. And then the final target, T3, was set at 47,284.
Okay, and this is where the story takes a bit of a turn. The cycle didn't unfold in a straight line. Instead of a simple 1, 2, 3, 4 sequence of events, it actually took an alternative route to get to the finish line.
So the path it actually took was phase 1, then it jumped straight to phase 3, then went back and completed phase 2, and then finally concluded with phase 4. So let's trace that exact path together. So get this, just one day after the initial setup, on March 31st, the first big event happens. The price hits that Apex N target we talked about, 46,246. And with that, phase 3 was marked as complete. And remember, this happened before phase 2 had even started. A couple of days later, on April 2nd, the price touched a level called the mirror delay. That event officially completed phase 2. So just to recap that unusual order of events, phase 3 finished first, and then phase 2 was completed. And that brings us to the final piece of this puzzle, which is phase 4, the completion of the entire cycle. And here it is, the final step. On April 7th, the price reached the upper boundary of the trapezoid, hitting that final T3 target of 47,284. This was it. This marked the completion of phase 4 and the end of the entire cycle. So now that this cycle is complete, we can do a side-by-side comparison. Let's look at the initial plan from phase 1 and see how it stacks up against the actual recorded performance. This summary table really tells the story. The realized return, 2.22%, an exact match with what was expected. But check out the maximum drawdown. It was expected to be under 5%, but the realized drawdown was just a tiny fraction of that, at 0.007%. But maybe the most striking difference here is the time it took. The cycle was originally projected to last 42 days. In reality, it hit its final target and wrapped up in just 9 days. A huge difference. And finally, we have to go over the disclaimers. This is really important. This content is not financial advice. The model being documented prohibits using leverage above 10, and you should absolutely never invest essential personal funds. This analysis is purely for public model documentation. Our tone is neutral, and we're not making any predictions or assumptions whatsoever. And that concludes our documentation of the DJ30_3_4 cycle. For anyone who wants to see more, you can find further documentation at the source website marketdnaedge.com. So, we've just seen a planned 42-day cycle that actually wrapped up in just 9 days. It kind of makes you wonder, right? What could that kind of efficiency suggest about the underlying structure of market movements? We'll leave you to think about that.